may have moved. Mankind Pharma, Ajanta Pharma. I think we'll see some serious movements in some of these stocks. Andrew Holland is with us as well, CEO of Indus Capital Public Markets. Andrew, while the budget is the big story, we can't take our eyes away from 197 Communications or Paytm. It's a sharp downtake and an action which not too many people would have thought would happen so soon has happened as well. What do you make of this? What does it mean for shareholders of Paytm?
It's difficult to say on this one, Niraj. I think there's a conference call this afternoon, and I think we'll get more clarity then. So I think until I hear what the management has to say, I think we're all kind of firing in the dark. Yeah. Yes, from what the RBI have said, it looks dire. But I don't know what they can do about it. So let's hear from the management first. I think we've seen one side of the story. Let's hear the other side.
Fair call. And yeah, Andrew, we'll get the big picture too. But just that at the start, when a stock like Paytm, so much in news, down 20%, or to pay cognizance that. Chakri, can I get you in on this as well? Because this will be the big talking point, and we're going to talk about the budget. We're going to talk about earnings as well. But do you have thoughts on what does somebody who's an existing shareholder of Paytm think about this whole issue, and what could it mean going ahead?
Indeed, Niraj, I think the concerns for Paytm have been building up over the last several months, and on this issue, which is now this issue is unlikely to go away anytime soon from the way RBI circulars have come out one after the other. And, in a business which is largely a pass-through business, which Paytm's business model is, third-party businesses could, dry up very quickly. And that impact, and therefore the volumes that Paytm enjoys can get hurt until there is clarity and also probably beyond. So for existing shareholders, clearly it's a tough place to be in, and clearly to remain on the sidelines for anybody thinking of, I would stay on the sidelines for the stock.
Right. Andrew, of course, we talked about Paytm with you, but change gears. Let's talk about the budget. How important is this event going to be? Let's not forget it's a vote of account, and let's not forget that the markets usually either discount this or move on very quickly post the event. How much significance are you giving this budget as an investor?
I mean, as long as there's no surprises, obviously negative surprises. Positive surprises markets always like anyway. So, as long as it's more of the same, the direction's the same, I think the market will be okay. But I think that quickly thereafter we'll go back to, more global as well as local kind of factors which will drive the market. Earnings season hasn't been as blockbuster as I think most of us were hoping for. It's been okay, but nothing great. And obviously, with the Fed saying what they said last night, interest rates are not likely to come down so quickly. Getting that Goldilocks scenario, the markets have been looking forward to, not just here but globally as well.
All right. So interesting morning. Paytm, of course, being punished. We talked about how that would be one stock to stay away from. There's a conference call with the management 3:30 this evening, and maybe some clarity there. Meanwhile, look at what's really moving pre-market. Dixon Tech about 3.5% up in your pre-open session. So is Mankind Pharma, a good set of numbers over there. Shriram Finance, meanwhile, doing quite poorly, as is Max Health and Jubilant Food. So you're seeing quite a bit of play over here. I want to come quickly to Sudeep on Dixon. Decent numbers, good numbers, as well as a policy push with import duties on certain mobile components getting cut. Any views there on Dixon? And I reckon, what would you say on Paytm, if anything, Sudeep?
Let's start with Dixon first. Now, if you see Dixon, the charts in the last 7 to 8 months have been consistently constructive, and that's quite positive. Now, Dixon, if we all know, in the last, say, since November 2021 till Feb 2023, it was on a continuous downtrend from 6,000 to 2,500 levels, and it in the last 1.5 years, it has change its gears, and now the charts have, if you see the monthly charts, a lot of higher top, higher bottom formations, as well as in the last 1 month, we have seen some consolidation, and post that these good numbers are leading to a gap up, and we feel that right now the stock is in a complete uptrend, and any dips towards 6,000, 6,050 zone should be bought with a 5,900 stop loss, and we feel that very soon this stock could hit a new all-time high, and so if you see around 6,400 could be the first level, and then the levels of 6,700 could be achieved. So overall, we are quite positive on this stock. And if you look at Paytm now, it's a complete contrast chart, and since the listing times, we have seen the stock completely plummeting. In between, we have seen some kind of a rebound, but even in that rebound, the stock has never recovered more than 38 to 40% of the entire fall from listing. So overall, it's in a downtrend, and today's move is reaffirming that. And I feel investors or traders should completely stay away from these kind of names or trying to bottom fish here. But if investors are stuck, any rises post today's say the circuit opening or in the next few days should be used to exit this counter.
Right. Andrew, I'll come to you with two sectors, railway and defense. The last few months have been phenomenal for some of these stocks. And even the stock performance, the earnings have been rather impressive. Do you think there's anything that could come out in this budget that could fuel the next leg of rally for these stocks?
I think the budget would have to actually confirm that all the expectations in the share prices and the earnings expectations are going to be driven by the capex. So, if you take the budget as a whole, obviously, energy, renewables in that respect, defence and railways will be something that the government will always spend money on. Depends if they divert any of that and say something like affordable housing. Maybe they're going to look at that again to kickstart that, in terms of getting the bottom end of the housing market moving, not just the top end, which we've been seeing. So it's a fine margin. I just think the market's baked in, strong capex by the government across all of these sectors, and obviously, order flows will come through, and the share prices or the stocks are moving ahead of this expectation. So. Again, you can only disappoint on the downside here. I'm not sure there's any extra you're going to get from the budget to propel these stocks higher in the very short term.
Okay, so pre-open rates have settled. Thanks for that, Andrew. Pre-open rates have settled, and seems that Paytm will do what it does. Mankind Pharma, Ajanta Pharma will do what they do. GMR Airports on the poor numbers will also start off weak. What will do well? Maybe cement. Just before I get to cement, this is live footage. And, what is in this bag is something that will be the cynosure of everybody's eyes.
I just want to talk about the Bahi Khata, because this is important.
We have 30 seconds to do that.
30 seconds. Traditionally, the finance minister used to carry a briefcase. This one changed that to a red Bahi Khata, which is the traditional Indian ledger book. So that shot is important.
So much for modernization, huh?
No.
Shouldn't we move to an iPad?
It's about, but she reads from a tablet inside the parliament. This is to show that we are moving ahead, but we're sticking to a traditional route. So a lot of symbolism in that red folder. It's the Bahi Khata that you're saying. Just
for whatever it's worth, Bahi Khata is a startup which is valued quite significantly as well.
Trust me,
so keep that in mind.
Always link it to stock on the radar.
Yeah, most certainly. Okay, let's get focused on cement stocks as well. Mahika is here with the brokerage views on Ambuja as well as Shree Cement. Mahika, very quickly, what are brokerages saying?
So I'll start with Ambuja, and it's a positive overlook. Morgan Stanley maintains an overweight, and they say that Q4 will see the Sanghi integration come into full effect, and they're betting on the long-term market gain, which will be supported by expansions. Citi also retains the buy, and they say that there is a favorable swap ratio for Ambuja, which was the merger with ACC. Nuvuma also has retained a buy rating at a price target of 609, and they've also mainly focused on Ambuja's new guidance to achieve an EBITDA per ton of 1,450 to 1,500 in the next 3 years. Then we have Shree Cements, where Morgan Stanley has maintained an equal weight, and they are betting on the strong volume growth outlook on the rising share of premium products. We have Jefferies that also has a hold rating, and they've spoken about the cement capacity additions that Shree Cements aims to make. And finally, we have Motilal Oswal, which has also maintained a neutral rating, and they've raised the EBITDA estimates by 3% for FY25 and FY26 each.
Right, cement is, Mahika, thanks for that. It's going to be the big talking point this morning for more reasons than one. Beyond the budget, stellar numbers being posted by the likes of Shree Cement. If you can just take a look at that, the stock performance in the recent few weeks or months will be interesting to see. But the commentary as well coming from the management has been solid. So 3.5% gain is what we are picking up on that. Along with Shree, you'll have your Mankind, your Ajanta Pharma. Those stocks will be in focus. 197 Commune, Dixon Technologies, IRB Infra. That could be another one that you want to watch out for. Westlife, Jubilant are some of the other names that will be drawing our attention in early trade as we run into the budget very soon. IRB Infra 4% move after a 25% gain the stock has seen over the last few weeks. Dixon also not looking too bad, 3% higher. But yeah, Tamanna, a minute to go. I think sideways trade is what we'd be expecting at least till 11 o'clock.
Absolutely. But, you know, I'm just going to digress because I'm quite excited seeing those pictures of Finance Minister Nirmala Sitharaman. This is going to be her 6th budget. She is now at a record number of budgets. She is the first full-time woman finance minister to have presented these many budgets, and definitely an exciting one because she's taken the nation through COVID, kept a tight check on fiscal deficit despite what was expected, and we'll wait and see if she can manage to do that. So a lot to watch out for, Niraj, and perhaps what she says today is something that may not play out immediately in the markets, but will set the flavor for the next several weeks.
Yeah, and hopefully if it has an immediate impact, it's a positive one, Tamanna. So watching out for, hoping for that, if you will. But 27 seconds left for the markets to kickstart trade. Our guests are with us. We haven't been able to ask Andrew about all the things that he's watching out for, not Chakri, about the expectations from the key sectors. But we'll do that in moments from now. For now, as Samina and Tamanna have stated, focus on the stocks which will react on numbers or otherwise. The start, we'll watch out for also what some of the auto names and pharma names are doing and whether they're taking off from where they left off yesterday. Here come the first trades on the market open. Okay, we'll get them in a moment. Yep, it's a flat start, 21760. Let's get the bank Nifty and see if HDFC Bank is participating. Maybe, not too much, but the bank Nifty is up about 1/3%. The mid caps and small caps, which had a very strong day yesterday, flattish start for the mid cap space, and the small cap index about 0.5%. By the way, viewers, this is not too bad because Asia is very, very mixed after what the US markets have done yesterday. Bring up the heat map. We are flat too. Bring up the heat map and let's see what's moving and what's not. On the downside, not too much. Wipro is the top loser. So on the gainers, Tata Motors, Eicher, Maruti, Hero, M&M. It is an auto day, as was an auto day yesterday. Yes, BPCL is the top gainer, but the screen right now belongs to autos. There is, yes, the 5 of the top 6 performers are auto names. There is an Adani Port, Ultratech participating. So not too much of a cement flavor, but nevertheless, we're seeing some bit of moves there. So the large caps are very, very muted. Suffice to say the action is at the broader end of the spectrum. So I'll quickly hand over to Tamanna for what's happening at the broader end.
Yep, absolutely. And, you know, if you tuned in this morning, you would have seen autos on our list of stocks to watch. Good numbers are expected in this month. But I want to quickly take you through some of the other very, very important stocks that we're watching. And, you know, we can't avoid Paytm on that list. Sort of a jolt from the results Reserve Bank of India after market close yesterday, and you already saw that stock get beaten down in pre-open. It's continuing at a 20% dip, so it's a lower socket kind of a scenario. That rocky boat is expected to continue till you have some clarity from the management in a con call at 3:30 later today. What's happened? RBI has stopped Paytm Payments Bank from accepting any money. Dixon Tech is the other one that I would keep on the radar. So earnings impact has been positive. They also will have some kind of relief from lower import duties on mobile components. So Dixon is up about 5.5%. We talked about Godrej Consumer, where you've seen the FMCG space quite muted, the consumer space quite muted. Godrej Consumer relatively good numbers. The stock about 9.5% up. Westlife, on the other hand, may not have the same kind of a story, and you're seeing the McDonald's seller, the burger seller, down about 3.5%. They've had some issues with same store growth. Their SSG numbers have been poor. Floods, in part, have been the reason for that. So some of the stocks on our radar this morning.
The stock of the morning, one of the stocks of the morning is Dixon Tech. The stock is up and about. Sharp up move coming in on the counter on back of a pretty solid performance being put out by the company. We have with us Atul Lal, Vice Chairman and MD of Dixon Tech. Atul, thank you very much. This is Samina. Thanks for joining us. I know you have a meeting, so we'll keep this short. We'll keep this quick. First up, you want to walk us through the fantastic quarter you've had?
Well, it's been a good quarter for us, undoubtedly. We have grown in revenues by 100% and more than 90%, almost 90% in profitability. So indeed, it has been a good quarter. The order book, particularly in mobile, telecom devices, the new contracts bagged in the IT products looks healthy. And even in other businesses, except for one business of lighting, the business looks good, yeah.
Mr. Lal, good morning. Niraj here. The note suggests that two things have happened. One, integration that you are seeking. So one, that the guidance, you've refrained from giving a guidance. So is there a specific reason for that to happen? And two, just a word on margins as well, because one of the notes seemed to suggest that you're looking to vertically integrate with PCBA for industrial products which can aid margins.
So we are not giving any specific guidance, but we are assuring all our stakeholders that the growth is going to be extremely aggressive. We are sitting on some kind of an inflection point, a sweet spot. We are into 9 businesses and in lead positions. So the growth, please be rest assured, is going to be very, very good. As far as so now is the time for Dixon. We strongly feel that not only grow horizontally in different domains, but also work on deepening the value addition. So what I had stated in the earnings call yesterday was that we are very seriously evaluating project on displays for mobiles and for IT products. The discussions are on with the potential partners. Let's see how it pans out. The other foray is into the EMS domain, wherein the margins are higher. And that is for PCBAs and also for box building for industrial electronics for global markets. So we have set up a team. We have received some significant RFQs. Let's see how it pans out. So these two would also be now the focus areas.
Okay. Mr. Lal, so revenue growth, formal guidance notwithstanding, would you reckon that FY25 could be a year of growth which could be similar to FY24 in color, if you will? And could it be accompanied by better margin profile as well? Also, maybe a sense of any new logos that you're adding. I know you refrain from giving names usually, but is there something on the anvil?
So undoubtedly, the growth in the revenues is going to be in a similar range, what you just mentioned. As far as the margin profile is concerned, because largely the growth is coming from prescriptive EMS business, I don't see an uptick on the margin. It's going to be in a range of 4.2%. And as far as the new customer acquisition is concerned, yes, we are on the anvil of signing with a couple of large brands in mobile, and also the discussions are on with some more large global brands in IT products. In telecom devices, we have an extremely strong order book from our anchor customer Airtel and also the largest mobile operator. So the order book looks good, yeah.
Good morning, Mr. Lal. We're also speaking to you. So a couple of things that are exciting for Dixon this morning. Of course, your numbers, but it's also the budget. And it seems that whatever was on your wish list, maybe one of them got ticked off yesterday itself with import duties cut from 15 to 10% on some mobile parts. Can you explain to us the impact of that for you? Is that something you will pass on? How does that play out?
So undoubtedly, it was a very, very significant positive announcement by the Ministry of Finance yesterday. Yeah, it was a big positive surprise for us. And this has been the ask of the industry for quite some time, and the government has responded to it extremely positive. So there has been a reduction on various components, and also there is some clarification on custom notifications pertaining to display. So these are very, very positives. And even beyond mobile phones, there were certain clarifications sought on custom duty exemptions that were there, and there were certain doubts around it. So those exemptions have been extended. So undoubtedly, it's a boon for the industry.
Lal, very lastly, I know you've got to run, but one last question. You talked about the cut in import duty, but anything else that is on that wish list that you're hoping could either come through in this budget or the full-fledged budget in July?
So the policy intervention and policy framework for electronics industry in the last 2-3 years has been amazing. The government has rolled out PLI schemes, the PMP programs, the SPEC scheme, duty intervention, non-tariff interventions, quality control orders, semiconductor policy. So the package has been rolled out, and now the industry has to respond. However, from the industry side, also what we are requesting is that to deepen the value addition, we need a policy intervention on the non-semiconductor component side. And when we are interfacing with the government, we see their response to be positive. So this will deepen the value addition for electronics manufacturing in India. And also there is a possibility that when these footprints or non-semiconductor components are set up in India, in these components, India will become a part of GVC, the global value chains. So that is what we are expecting. And we are getting positive responses.
Okay, Mr. Lal, we'll leave it at that. Thanks so much for taking the time out and being with us, and all the best for the year ahead.
Thank you so much. Thanks very much.
That's Dixon Tech, strong numbers and doing well. Andrew, Chakri, Sudeep are still with us. Gentlemen, sorry, but just that kind of a morning, too news heavy, so couldn't do justice to the time, but we'll still try and make good. Andrew, I'll come to you first. On the commentary that you hear from companies like Dixon, I mean, margins notwithstanding, they've grown at a breakneck pace for the last few years and continue to do that. What happens to some of these EMS plays? There are now 8 or 9 listed. How constructive or not constructive are you on this space?
Very. I think, Niraj, I think we just need to say that we're at the beginning of the runway here for the whole electronic manufacturing sector. It's got a huge kind of 5 to 10 years of growth. Now, in between time, you're going to get usual things about margins and this and that. It's the same as the telecom sector. If you go back and look at Bharti, it has, kind of ups and downs along the way. But see where it is today. And I think that's what you got to look on the long term here for this electronic manufacturing sector. If the government continues to push this either through more kind of incentives and PLIs, it's going to be a kind of investment horizon. If you've got 3 to 5 years, you're going to make a lot of money from this sector, and there's plenty of companies, as you just said, now to kind of to invest in. So that's the good news. So you just have to kind of dip in and keep there for the long term.
All right, Chakri, let me come to you on a very specific budget-related point. Also, auto sector is completely zooming this morning. But when we, Chakri, back to budget, when we talk about the push of the government in terms of Make in India, and that's a theme, taking off from what we're seeing with Dixon. Dixon's growth is also part of the larger Make in India rubric. We're seeing that with defense stocks. How would that play out into specific investment decisions for you? What would be, say, your top 3 companies that would ride the Make in India wave?
The Make in India is actually impacting just about every sector in the manufacturing space. We just was talking about EMS as a space now, whether it's Dixon, Avalon, all these companies, they have both export revenue as well as the import components to make that export revenue. So that importing bit is the PLI schemes to replace it. And so that incentives is great. Second is, solar, renewable energy. A lot of the solar panels, manufacturing, EPC, the prices have crashed. Now Indian companies like Sterling Wilson can now compete with the global players, and the rollout makes it so much more feasible with the policies in place. Then third, if you look at including the other aspects of manufacturing, whether it's defense, in defense, the value chain is quite huge. Now, it's not, now if you look at a company like the Bharat Electronics, now this is a company whose margins have actually improved in the last couple of years, simply for the fact that they're moving down into higher margin, aided by the government's thrust. So we are seeing this benefit trickle down across various sectors.
Chakri, one quick question before we're completely out of time. I want to talk to you about auto at this stage. Tata Motors in particular has been zooming ahead, even ahead of the budget or the auto sales numbers. Overtook the market cap of Maruti only yesterday. And as a whole pack, actually, that sector has been doing well in terms of stock performance in the last few days. What's your view on auto, and is there any specific auto stock you're constructive on at this stage?
Auto and auto ancillary both will continue to benefit. Auto ancillary has a lot of the PLI incentives so companies like Motherson Wiring, they'll benefit right from the EV push as well as the PLI push. And second is, Tata Motors, you mentioned, it's a global story, it's a local story, commercial vehicles, passenger vehicles, strong lineup of EV cars, strong lineup of domestic budget cars, commercial. So it's there across the board. Its balance sheet has dramatically improved. So as and when the global economy also starts ticking up, now you'll have a dual engine. So Tata Motors still looks very good. TVS Motors in the two-wheeler space looks very good.
Chakri, we'll let you go on that note. Thanks much for taking the time out and being with us. Really appreciate. Andrew, just stay on because I just want to get an FMCG view here. But before I come to you on that, just want to mark Godrej Consumer, Dabur are amongst the two names which have had a really strong start in the session. On the back of that, a couple of others might be doing okay. I wonder if the FMCG index by itself is doing okay for itself. Sudeep, come in on the start that some of these FMCG names have had. And is there any that looks attractive from a trade perspective?
Niraj, if we see this FMCG index today, it is up 0.5% to 1%, but largely both these names which you just mentioned have done fairly well. But apart from that, HUL, ITC is kind of sluggish. So that is the reason we are not seeing any major bump up in the index. But apart from Godrej CP, I feel one name which deserves a mention is Kolpal. Now, Kolpal, even while we were discussing about the rollovers, now rollovers also were very good in Kolpal, and the stock is in a completely upwards trajectory on a monthly as well as weekly chart. So there is strength building in Kolpal, and I feel very soon this also could break out on the way on the upside, and this looks good from positional perspective.
One very quickly, please, Sudeep, take on Motherson Wiring, because Chakri spoke about it. That stock nearly 5% up. What do you like Motherson Wiring, and do you like anything specifically in the auto anch space?
Yeah, so if we come to Motherson Wiring, the stock has given a breakout now. It's a monthly breakout, taken out all the previous swing highs around 65, 66 levels, and I feel the structure is very good from the current levels also till it holds 63. The stock could move all the way up to 78, 85 levels on the upside. It may take a few weeks, but the trend is very strong. And one stock in the auto ancillary space which we like is Banco Products. Now, This stock has seen a fair bit of up move in the last several months, but the trend is still stronger here. It might consolidate from a short-term perspective, but looking at the monthly charts as well as the weekly charts, I feel the larger move is still there to be taken. And on any dip to 685, 700 zone, this could be bought for an upside of 800, 850 with a stop loss placed around 650 levels.
All right, Sudeep, thank you. Great having you on the show. We'll connect with you later this week, or next week actually. With that, Andrew, I want to come to a sector that you've been tracking and you actually quite like, is the tourism space. We saw numbers from Thomas Cook as well. I know small company, but those numbers were actually phenomenal in terms of top line growth, improvement in margins, and outlook as well has been looking pretty good. With the budget around the corner, do you anticipate a push for tourism? Is that a space you're watching out for closely? And if yes, any sector, any stocks particularly that you like in this pack, even the tourism ancillary play?
Yeah, I think I'm not sure what the government would do in a budget for tourism. I think Prime Minister Modi's done quite a lot for the tourism industry recently in terms of, talking about travel in India, being in India. So I think that momentum will continue. And I think, every time I speak to people, they're complaining about the prices of airlines and the price of hotels, but guess what? They're still going. It's all going to be about experiences, and it's not just at the top end of the hotel chain. It's across different levels as well. So I don't see this as being anything that's going to reduce in the short term. But if anything, I think we'll see more and more business people traveling into India, and I think we'll see more foreign tourists coming into India as well over the coming year. So this will be the extra kind of fillip for the revenues for both for airlines and for hotels. So I think it's a great sector to be in, and I think it's one that you're going to see very, very strong growth because the operational gearing is going to be huge. Without having to add so many more rooms or so many more seats at airlines. You can fill those to their capacity and get some fantastic revenues.
Absolutely. Thank you for that, Andrew and Sudeep. Markets, meanwhile, as flat as they can be, sapat, as they say in Hindi, completely hedging their bets, waiting for some clarity to come in from the big event, which will be in just over an hour from now, when the finance minister speaks, an hour and a half actually for that speech. We're taking a very short break, but on the other side, Nilesh Shah of Kotak Mahindra AMC joins us for his take on what we can expect in that red Bahi Khata that finance minister is carrying. Stay tuned for that.
Back to India market open on a news that the market is flat as a pancake, as Navjot Singh Sidhu would say. And I use that cricket connotation on purpose because our guest today loves to club cricket and markets and investing very well. Nilesh Shah, Group President and MD, Kotak Mahindra Asset Management Company, joins us right now on the show ahead of the budget. Mr. Shah, good having you. Thanks for taking the time out. And do you expect this budget to be a profound one, or would this be, in the words of the FM, the prelude to the main budget that comes, in the words of the PM, the prelude to the main budget that comes in July?
Undoubtedly, Niraj, this will be the trailer. The full movie will be visible in the next inning. But a T20 trailer equivalent will be as entertaining as the long-term test match.
Sure, most certainly. So what do you anticipate, Nilesh bhai? Would it be, would the FM be able to balance out a fiscal consolidation move by virtue of the fiscal glide path that we've given out while maintaining the thrust on capex? Are both of these in the same measure possible?
So, there is trinity of impossible, where on one side you create inclusive growth by spending money. On second side, you invest for future through investment, and yet you maintain the path of fiscal prudence. But over the last 6 budget, Honorable Finance Minister has achieved that. It's like Virendra Sehwag betting on the Multan Test cricket, where between beginning to lunch he scored a century, lunch to tea another century, and post-tea before the closure of the day, third century with a 6 from 294 to 300. If a finance minister is betting like Virendra Sehwag on Multan pitch, then why should I have lower expectation? In my opinion, I have very humble expectations from the budget because finance minister is betting like Virendra Sehwag on Multan pitch. Please take measures so that consumption at the bottom of pyramid starts growing as fast as the top of the pyramid. Please support ease of doing business or investments in a manner that private sector capex starts growing as fast as the government capex. If these two catalysts are achieved with the path of fiscal prudence, I have no doubt in my mind that India will become citizens' pride and peers' envy.
Hi Nilesh, this is Samina as well joining in, and if taking a cue from what you said, if it is going to be supporting the lower end of the pyramid, the focus is going to be farmers, women and youth. If all of that is played to script in the next few hours, will that mean anything to the markets, or this is beyond markets? Because we do understand the budget is not just about equity markets, right? It's about the country, it's about the economy and a whole lot of other things. So will that have any significance for the equity market is what I want to know.
So equity market is priced for perfection. We are expecting finance minister to hit 4s and 6s. And this vote on account will give confidence to the market that India is on the right path. It will create inclusive growth. It will invest for future by infrastructure investments, by investments in education and healthcare. And yet, at the same time, it will maintain the path of fiscal prudence. We will differentiate ourselves vis-a-vis our peers because we trade at premium valuation to them. So this vote on account is a step in the right direction to reassure the markets that what you have seen in the past, where India achieves trinity of impossible, it will continue to move in that direction.
Nilesh, moving from equity markets to the bond markets, while that fiscal deficit number is going to be very important, and of course the range is anywhere from 5.2 to 5.5, people also believe that it's going to be the borrowing that will be even more important in terms of what the bond markets or banking stocks will do. Again, that number also ranges from 12 lakh to 15 lakh. How do you feel about the importance of this number and the fact that you are going to get, as a nation, $25 billion this year on inclusion in the GPM? So what does it mean in terms of borrowings? What will it do for banking stocks and, of course, as bond markets as a whole?
So we believe The quantum of fiscal deficit will be lower than last year as we move towards the path of fiscal prudence. From 5.9 fiscal deficit should come at about 5.3, 5.4 or 5.5. The net borrowing program will be almost similar to last year at about 11.5 lakh crore. But unlike last year, this year will have the benefit of debt foreign portfolio investment flowing through. If we do engage with Bloomberg bond indices, this number can even go further up. So there will be lesser pressure for borrowing program to go through. We will also be aided by potential rate cuts globally, which will create elbow room for RBI to cut rates as and when appropriate. So overall, my feeling is that the bond market will be softer and the year-end exit yield, let's say in March 25, will be at least 50 to 75 basis points lower than what we are seeing today.
Nilesh Bhai, good morning. Tamanna here. And I agree completely with Samina's point. Actually, budget is not for equity markets, but we are watching on, figuring out what's in it for us. Just your quick take on the point, which is very clear, that your capex build-up will be less than last year. It's on a higher base, but the government is likely going to spend at a lower pace. What does that mean for a factor that has been the biggest push for the markets on infra, rail, defense, green energy, based on government being the big spender? If government starts tightening the purse strings to reach a 4.6% fiscal deficit in 2026, is this something that worries you in the short term?
So our feeling is that most probably 4.6 for 2026 will be a bit ambitious to achieve, and hence it might get postponed a little bit. Second, today private capex is not growing as fast as the government capex, and hence government will have to be the front foot better rather than back foot better. The quantum of infrastructure investment this year is likely to be higher than last year. Last year we were targeting about 10 lakh crore. This year we may not target 12 lakh crore, a 20% increase, but certainly 11 to 11.5 lakh crore. This growth in infrastructure investment is necessary to maintain the momentum of our economy. And my feeling is that government has today opportunity on asset monetization and divestment, which will help raise its resources to fund infrastructure investment. So I don't expect degrowth in infrastructure investment. There will be an increase, and yet it will not deviate us from the path of fiscal prudence because there is opportunity on asset monetization and divestment. Okay.
Nilesh Bhai, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time. Take a very, very quick break. Back with more content on the budget. Back on NDTV Profit, let's cut across to the CI panel. My colleague Manvi Sinha Dhillon is in conversation with the CI President R. Dinesh and the Director General Chandrajit Banerjee.
We are talking about to further support this.
Okay, and I'm tempted to bring in Mukesh's assessment on whether on those specific actions that Mr. Dinesh has just outlined, we can expect movement?
The context to what is likely to come in the next 1 hour is 3 important statistics. We are touching a GDP growth rate of 7% against a world average of 3%. We are officially now the 3rd largest fintech economy in the world after US and UK. And we are now the 4th largest by market capitalization insofar as the equity markets are concerned after US, Japan, China. We've overtaken Hong Kong. So we find ourselves in a very interesting situation. And then we have a situation where still about 100 million people are below the poverty line, a fairly large middle class and growing economy. So what does one do with all of these, interesting statistics around us? It has to be growth-driven budget. Focus would be equal on agriculture, youth, women empowerment, employability. I think Dinesh cited out some important statistics. I think I would anticipate that the 15% corporate rate of tax for new manufacturing unit, which is officially supposed to be expiring for manufacturing, before March 31, 2024, to be continuing. I think there is scope for creating incentives is not the right word, but I would say, lend thrust by way of non-tax incentives, continuation of PLI, employability. There has been a thought for last several years whether you should bring back investment allowance, a capital allowance, which used to be there in the 80s and the 90s to give thrust to private sector capex. For reasons well known to the government, they have not brought in any changes, but I think this is a good inflection time for us, given the growth trajectory, to look at it.
Okay. You've, in a sense, touched upon business sentiment. You've also said very clearly that government spending on capex should continue. It's still needed to power the economy. Break down the business sentiment for us, and specifically from a capacity utilization perspective, because I know CII crunched those numbers with its members. When is there going to be a marked step up in private investment?
See, if you look at what has happened in the last 2 quarters, our surveys have shown that cutting across sectors, the lowest has been 75% capacity utilization, and in some sectors we have already seen 100% capacity utilization. But really, if you look at from a global scenario, and especially the geopolitical situations which arose, and as was pointed out, I think last year we talked about global growth as being less than 2%. So that is, I think, one of the main reasons why you have seen that the current capacity has been enough for, I would call it, the domestic growth. But having said that, if you are looking at another 7% growth over the last 3 years of 7% or more than 7% growth, and say as forecast, as you would have heard, is in excess of 7%, we do believe that we are already there. So it's a question of each of these sectors coming and private sector investments coming in to make that up from a manufacturing perspective. If you look at from investment in infrastructure, I think this crowding in or the support which has been given and that getting down into the states. So if you look at the center, the maximum expenditure has happened. So the rural areas, the focus on the infrastructure on the state side, and you see already some of the states have caught up significantly. So the rest of states catching up will be what I think will mean even more investment from the private sector, because at the state level is where the smaller companies will be investing in. So I think you will see that happening sooner rather than later, and you will already have seen it in certain sectors, but you will see it spreading across more sectors as you go along.
I don't know if it's realistic to expect too much in the interim budget, but I say this is as good an opportunity to send a strong message out to government on what business critically needs at this moment. For instance, Mukesh talked about the investment allowance. I'm going to ask you as honestly as possible to mind the conversations that you have with all your peers and say if there's that one thing which is still a bit of a prickly area for businesses which could be tangibly addressed in the next few months, today or July?
Actually, I wouldn't say it's a prickly area, but it is a very difficult path to navigate. And just as we have navigated the difficulty in the geopolitical situation and the inflation and managing that from a fiscal deficit as well, I think the next issue will be the transition or the correct transition from both energy and sustainability initiatives. So there, how do we support the MSMEs? How do we support the small companies which are based not necessarily on sectors which are today seen as high growth areas? So those are the areas where I think both from industry perspective and from the economy perspective, I think both the government and the industry have to work together to make that happen. And that, I think, direction I 100% believe will be there in the interim budget itself. And as you said, that hopefully will be addressed even more squarely in the final budget. So there it could be a fund to support them, digitally transition to make sure that they utilize the benefit of the digital public infrastructure in a better way, and equally so when it comes to supporting the transition from the climate side of it.
Indeed, but they're still talking about old issues that plague them, like access, easy access to credit, more painless procedures when it comes to taxes. Again, sort of pedestrian things, but those are areas that we've seen moves on in recent years. I just want to, of course, our viewers are seeing the images on the screen, I'm sure, but, Finance Minister Nirmala Sitharaman arriving in Parliament, so now you have the countdown beginning in real earnest. I interrupted your thoughts when I raised that point.
I just wanted to add that we did, CII has already mentioned that while the budget is not the right place to talk about it, that there should be a three-tier structure on GST, to go back to your point of ease of doing business for the smaller companies, because they find it difficult to manage because of the multiple tiers.
Indeed. Well, I think we're going to take a quick break at this stage. Don't want to miss any action right here in the NDTV studio. And we have Nirmala Sitharaman, Finance Minister, getting out of her car at Parliament. She's got a busy day ahead of her. Those images currently on your screen, which you can see. It's a rainy day in New Delhi for those of you outside this city. I don't see any umbrellas, so perhaps around Parliament it's not raining. In fact, it's looking rather clear, and I know that all the Delhi Vasis have been pretty happy with the clean-up in the air. And Vishnu's been talking about, climate focus, climate change support. All of these issues are, of course, becoming more and more.
All right, so fresh shots there coming in. A rainy day in Delhi. May the finance minister rain down upon us a very, very good budget. On that slightly corny note, we'll take a quick break. Markets back in positive territory, but we're coming right back. We have a packed house here at the NDTV Profit Mumbai studios with all our budget masters in the house. You can't miss the next leg of our coverage. We'll be right back.
Welcome back. We are in a full-blown panel as we run up to the budget over the next 1 hour. We'll be talking to our guest about what the expectations are. Our budget masters joining us in the studios. We have with us Pranay Saithya, Manish Dangi, Shankar Iyer, Rajiv Anand, Dharvi Dharmeshi and Mihir Vora. Thank you, gentlemen. Thanks a ton for joining us today on the show. Mihir, I'll start with you. Much ado about nothing. Is it a big budget? Is it an interim budget, a vote of account, like we're saying? Nilesh, in fact, a few minutes said this is the trailer and the full picture will be out in July. Do you feel the same?
I think so, because as it is, the budget has become quite a streamlined process, For example, the big component GST is pretty much outside the budget. It's decided by the council. Tax rates for corporates, individuals, especially the new scheme, new regime, is pretty streamlined. So not much left, frankly, to tweak around. But it's important to see the direction in which the finance minister wants to take the budget spending. Because, for example, we've seen a lot of stress on capex for the last 3 years. Whether that continues, and that's what the market's been excited about for the last so many years.
You think so?
Yeah, so that needs to continue, right? So we don't want any disappointment on that side. But the problem is that on the revenue side, they've been curtailing revenue expenditure almost just about 3% growth for the last few years. This is the election year, so there's a balance between trying to do something for the election and the population masses, especially given that rural economy still probably is a question mark, in terms of growth. So balancing capex requirements versus revenue spending is something that we need to watch out for this time.
It's an interesting point. And sorry, just a follow-up there. Could rural be flipping? I mean, just trying to understand. Women participation, remittance is very strong, as Pranjul Bhandari was telling us the other day. Wage growth starting to pick up, El Nino fading. So if you looks at 12 months out, could rural be a slightly lesser headache than what otherwise could have been perceived?
It's likely, yes. Especially, El Nino is one impact. We did see some unseasonal rain in some states this time around. But given that we've almost seen 2 years of not so great rural growth, the base effect itself should take care of a lot of growth. And with raw material prices coming down globally, inflation under control, that is a possibility, yes.
Okay. To be fair, El Nino is just starting, in the sense we haven't seen it played out. So a bit more of, agri pain.
El Nino impact seen, could it be fading? And that could be something in playing in the minds.
The impact of El Nino itself as a phenomenon has not played out completely. So we might not be at the end of that phase. But yes, rural consumption could be boosted, I suppose, by a lot of other factors as well. Mrinal, let me come to you on your take this morning. And, does this also become a very important vote on account or speech to listen to because of precedents? We know that in 2019, the same finance minister in a vote on account before an election was very clear about what she wanted to do and what this government would do when they came back, not if. That's the confidence with which they go into a vote on account. By all accounts, that confidence could be merited this time round as well. In that sense, is it very important to watch out for that what is the next step of policy direction? Yes, you have decided to make in India, you have boosted capex, infra spends are there. Now what next?
So, well, very relevant point. See, the vote on account is clearly going to be a statement of intent. In terms of where does the government see the revenue trajectories coming from, what do they expect, and where do they intend to spend? Now, the spending part is the most crucial part. The government for the last 5 years has been the largest spender in the economy. They have been the force behind which the entire capex story and the growth of the economy has been. So we would like to see that capex number moving up. We would like to see how do they intend to accrue that amount that they intend to spend. So that yes, it is going to be an intent statement. Indirect taxation is anyway out. It's part of the GST Council framework now. So the direct taxation, whatever they want to do, if at all, generally vote on account is not somewhere they tweak too much on direct taxation. But at least where do they see the revenue trajectory? Where do they intend to spend it? The direct taxation revenue trajectory would be interesting to watch. We would be very keen to observe what do they want to talk about it. The fiscal deficit numbers, that's crucial. If we do get any sense on what would be the off-balance sheet items, that would be interesting too.
Just on fiscal deficit, we spoke with Nilesh Shah of Kotak AMC just a short while ago, and in their view, the 4.6% target for FY26 is a bit ambitious and they may not be able to stick to it. Any call from your side?
I would concur. I think I would say 4.6 or somewhere around that would be very, very ambitious. In fact, the contours are more important. If they are going to spend that money into capex, that's fine. A bit of stretch on the fiscal deficit is all right, because we are yet to see a significant revival into private capex. Once that happens in a meaningful way, I think the government can decide to spend a little less. But at this juncture, the rural needs support. The economy needs supports in terms of government spending on capex. That needs to continue.
Taking a cue from that, and Shankar, I'll come to you. Rural needs support, and it's been explicitly stated that women, youth, and the poor, so the bottom end of the pyramid, is where the support will be coming in. It is still an election year. While the government seems confident about what's going to play out over the next couple of months, what do you think? Do you think this one may be a populist budget or unlikely?
First, I want to sort of disabuse this idea that this will be an interim budget. I don't think this government believes in asterisks. There are no conditions apply. And if you go by past performance, as all you market guys say, is a good guide for
I like the
future.
Refrain, all you market guys
Yeah.
say.
and I think the only thing the market guys say is don't go by past performance, but nevertheless.
But in politics, past performance is an indicator of what they will do. The 2019 interim budget presented by Piyush Goyal was 22 pages long, had extra expenditure of more than 1 trillion rupees. It was an interim budget, so-called. But the Modi government doesn't believe in interim and all those things. They will go in for. So take the context now of the economy. The political need and the economic need are at a convergence spot. You need to keep spending on capex, because that's how you're creating jobs, because the private sector is not yet creating jobs. You need to spend on welfare, because private final consumption is barely 4%, whereas your GDP growth is around 7%. So even if you want to push that, you will need to do that. Where are you going to spend? She referred to this whole new acronym that has been created by Hardeep Puri now and Mr. Modi, is Gyan, that is Garib, Yuva, Annadata and Nari. Translated, the voting class. Okay. Now that voting class is crucial for 2024, depending on what is their target. Are they targeting ab ki baar 400 par or ab ki baar 350, whatever is their target, they will focus on that. Unless you understand politics, there's no point in sort of waffling around the economic parameters of what the fiscal deficit will be and all. Mr. Modi, I don't think believes in all these ratios and all. I think he's conservative in the sense that you should have a structure by which is viable, sustainable, just as his politics he thinks should be viable and sustainable. So I expect a lot of things in this budget. I expect PM Kisan, some topping up or at least an announcement, if not an allocation. I expect some amount of push in terms of what they will do for women voters, because the W is actually the X factor in India's elections. And then they might have something to fix the problems of the old pension scheme and the new pension scheme. Yeah. And that's been there in many of the states. Now, having said that, they will also announce a big capex push for railways, because there's much scope in railways for investment and creation of... because it's one area where you have services, you have manufacturing, and you have connectivity, the logistics play. So they will play into that. Roads, we are pretty much at 30 kilometers per day, and I don't know how much more roads you can build, but definitely railways has scope. So I see, if you just put back all the things, Jaswant Singh used to say there is no economics without politics. And so there is the economic circumstance and the political need. So they are converging. So whether she makes only announcements now and leaves the allocations for July, or whether she allocates now, is a call that Mr. Modi will take.
Okay, interesting. On capex, and Mrinal, I'll come to you first on this. there's a point made that in FY24, state capex has shown a 40% growth YOI, and that is looking very strong. Does that ease the pressure a little bit on the center to dole out a big bang capex in a year, presumably of fiscal consolidation? And I know Shankar's views differ here, so I'll come to him as well. But let's assume that, forget 4.6, whatever the number may be, but let's assume that the next 2 years, some inkling of fiscal consolidation. Can they do that simultaneously while not increasing capex numbers too much, because state capex is anyways looking strong?
Well, the last union budget talked about 8.5 lakh crores of central government capex. My estimates are roughly 12.5 lakh crores has been spent in the economy, state and center included. Let's see what number the budget estimate comes up with this time. But state is significant, it's growing, but it cannot compensate for the central capex.
Of course not.
So, I think there's no great merit in getting fixated about the fiscal deficit number. I would say that as long as capex is driving that expansion, it's all right. Subsidies would be a bit more troubling. Off-balance sheet items are something that we need to keep an eye for. I would not be worried about a fiscal deficit, inching higher and being driven by capex. That is not a worry for me. Okay, that's required.
I want to make this point to me here, because I know Shankar is of the view as well that capex or a fiscal deficit number being higher, right, might be a possibility.
No, Niraj, one thing one must understand. The fiscal deficit number is just a ratio of your gap between expenditure and earnings. Okay. Yeah. Now, the economy might grow, and this might actually fall.
Yeah, but it will effectively be the ratio that they will announce.
Yeah,
right?
so if the economy grows, higher growth, higher capex, higher growth could bring down the deficit number.
But the problem with that is it becomes inflationary pressure. So economists may not be pleased if you have high growth and high deficit. So that is the double-edged sword there.
I don't know whether in India's inflation matrix, the government spending has some role, but actually it's the seasonal ones that trouble them politically. So the tomato story might be bigger than what Shaktikanta does.
Yeah, but be that as it may, the limited point, Shankar, is, and which is what I want to get Mihir here, is that independent of what your economy number is, they will give a fiscal deficit as a percentage of GDP ratio, and if that is higher and doesn't show the path towards the fiscal consolidation 4.6 number or a realistic number there, is there a reason for bond markets and then subsequently equity markets to be worried, Mihir? That's my question.
See, first of all,
or will they take it in their stride?
First of all, I think it's very unlikely that they will not reduce the deficit. They will show a reduced deficit.
Of course they will. The quantum.
No, I'm saying...
Sorry.
Because they have to show a path to 4.5, right? We are going to get included in the bond indices, global bond indices this year. And that's based on the premise that you are progressing on that fiscal consolidation front. Look, every country in the world blew up their fiscal deficits post-COVID. So I think that was necessary and it's done. But after that, we need a path to normalcy. And that normalcy for us is somewhere around 4.5. They have to show it, if not in 1 year, 2 years or 3 years, but they have to show it. So my guess is at least a 40 to 60 basis points reduction in fiscal deficit will be shown this year.
That's for FY25.
FY25, yes.
But 4.5% in FY26 seems doable to you?
I would say maybe FY27 looks more likely.
If you do 70 basis points this year,
even if they show a path to 4.5.
No, that's my point, yes. So independent of whether it gets met or no, do you think the bond markets and the equity markets will be worried if they don't show a 5.5 number or below?
I would
for
think
FY25.
So, yes, because everybody is working with the assumption of 15 lakh crores gross borrowings.
Right.
That seems to be the consensus.
But
right? Which is flat versus FY24. If that 15 lakh is projected to be higher, then it is a cause for concern, yes.
There's another way to look at it since the FRBM Act was passed, Government of India has never met its FRBM target. But every interim budget has a higher fiscal deficit number and the regular budget lowers it by 10, 20, 30 basis points. The question is whether they will give a pathway to 4.6, and that will be given, but maybe it will be pushed ahead. Okay, there is no country in the world which is holding on to its macro numbers. India has a reason to do it because we are already on the JP Morgan index, and then the Bloomberg index we are coming in, and there's one more apparently. So once you have that, you could see two ways. Anyway, the money is coming, so it won't affect the bond market that much, or to keep the trail route. So I tend to think that they will give a pathway because the government is very keen to upgrade its ratings. If you notice, in December, the chief economic advisor put out a whole compendium of essays in which a large portion discussed why India's ratings must be better. And so that is a goal for Mr. Modi. So I think that they will work towards that. So they will give a pathway. It may not be 2026, it may be 2027. They will also probably redefine some of the spending as green. Yeah. You see, that qualifies you for an exemption from the regular assessments among the rating agencies and others. So it's at the end of the day your definition.
I just want to come down to a very simple way of looking at it, and we'll take it through the panel, Mrinal. Today, at the end of 12:30 or so, and our budget masters will be there with us, what would be your best case scenario and your worst case scenario coming out of this budget? The assumption is that there is there's a very minimal chance of any harm coming out of it. No, hidden taxes which rock the boat, etc. But in your view, what would be your, best and worst possible outcome from today?
So, very interesting question. So, if you ask me democratically, most viewers would be liking to see LTCG going away. So that would be a dream thing for them.
Ain't gonna happen. That's not happening. Ain't gonna happen. I can tell you that.
Yeah. So I guess people will be happy. No tweaking around that. I guess most viewers will be happy. Most investors will be happy. It would be interesting to watch. There have been corners in the market which have been asking for government to review on the dividend taxation. They've been asking the government to review on the debt taxation. So does the government heed in that direction in some form? That would be interesting to watch.
Just a quick one. Indexation that got removed last year, I mean, has put the debt mutual fund industry, off. Do you think anything could be done on that? Would they revisit that, do you think? I mean, go back on it, or very unlikely at this stage?
I don't think they'll reverse it. In my expectation, they won't toggle back so soon. Dividend taxation seems to me something that could be more interesting to watch. There have been a lot of people who've been kind of pushing for that. Yeah.
Okay. Gentlemen, stay on. We need to cut across to Delhi, where my colleague Manvi Dhillon is in conversation with Sanjeev Puri, CI President Designate and Chairman in MD ITC, as well as Mukesh Bhutani, founder of BMR Legal, plus Rajiv Memani of ENY.
Make any changes, and specifically the benefits for new manufacturing companies, which is 15%, which lapses this year. If they can extend by 2 years, given the fact that manufacturing is now picking up in India, I think that will be great. And the second is, as always, I think people do anticipate that on the personal tax side, especially to spur consumption, deal with the inflation, if they can raise the rebate level, especially in the new tax regime on personal tax, from say 25,000 to 35,000 or 30,000, whatever that is. I think I would anticipate that. More than that, whether they will do capital gain tax rationalization, tax TDS rationalization, and the most important thing is how do they deal with dispute resolution, which I think is probably the most important thing in my view. Whether they'll do it in this budget or not, I'm not sure.
But they have the room to do it. There'll be nothing amiss.
There'll be nothing amiss. No, most of these things don't have a significant budgetary impact. And I think some of these representations have been made earlier also. So I know that the finance ministry is well prepared. I think my sense is just from a timing standpoint, when they want to do it is the issue.
Particularly, capital gains rationalization, TDS rationalization. I mean, sometimes you look at that and you wonder what is the logic behind the systems that we have in place currently. You talked about dispute resolution, and you flagged it as an important area for lay viewers. Can you just explain exactly what you mean and whether there's some expectation of progress in the interim budget?
I think we have made reasonable progress in the last 12 to 18 months in various areas. But I think one area where there's a lot of clogging up that's happening is in the area of CIT appeals. I think there's a lot of clogging up that's happening there. If they can find an easier way of, so that some of these things don't get into, litigation for 5 years, 10 years, 15 years, to alternative dispute resolution mechanisms, some of which are there, but they've either not been fully implemented or they're at slabs of income where probably the dispute levels are lower. That's what I would say. I think also beefing up the APA and also the bar, which is the advanced ruling piece. I think those things will be, my view is that those things will be very important. Again, I think the Finance Ministry is aware of this. They are well equipped to handle this. They'll have to choose the time when they have to do it.
They'll have to choose the time.
If I look at from an investor perspective, I would say consistency of tax rate, which has been the hallmark. Just figuring out that there are ways to resolve disputes so that they don't go on for 10, 15 years would be the most important. GST is another area, but I don't think they'll address that in this budget.
Okay, Mukesh, if I can get you to weigh in terms of your experience on the improvement in the dispute resolution environment, it would be good.
I largely echo what Rajiv mentioned earlier. We may not find many of these in the finance bill, even if she moves legislative amendments, which is unlikely in an interim budget. But I think the government has a knack of, making progress on this on a continuing basis. Case in point is the tribunalization of GST. So though we've had, 4-5 years of GST law, we've had GST assessments, but the disputes were landing up in the courts by way of writ petitions, and the courts never wanted to get into the merits of the case except give temporary relief to taxpayers by staying the proceedings or staying the recovery of demand. So tribunalization of GST was an important step which was taken 6 months back because it was clocked in disputes on the vexed issue of appointment of members,
right,
and which was cleared eventually by the courts, and that led to the appointment of members. The point that Rajiv made earlier, which is the first appellate authority, CIT appeals he referred to, that's an area where most of the appeals get stuck. However, having said that, I see a fair bit of development occurring on streamlining the dispute resolution. So if you just look at the digitalization of court records, the faceless appellate schemes, all of these measures are not necessarily featuring in the finance bill.
But they're happening parallelly.
But they're happening.
I'm just going to take in Rajiv's view here on, and this is a very simple question to you. Interim budget, modest expectations, we've all made that point repeatedly. But if there's one thing missing from the speech, which will really be a disappointment for you, your peer group, flag that off.
No, I would say one would really look at macroeconomic guidance for next year. I think that's the
most important?
That is the most important, and specifically what is the capex spend, because that's really something that pushed the economy.
So you're looking for a 20% increase in government capex spend?
Yeah, I mean, I think it really depends on what's the budget expectation they have on GDP growth. Are they looking at 7%? If they're looking at revenue collection growth of 12%, then you have flexibility of increasing capex spend by 20%. But if this government also, they've done a very good job of making conservative projections. They've almost overachieved on the revenue side at least. So if they're able to do that, I think that probably, in my view, would be the single most number to look at.
One number that we haven't talked about, and I'm wondering how important it is in your assessment, is the fiscal glide path, the fiscal deficit number that they put in the document. A, is it important? B, what are you expecting it to be?
It's definitely very important. I'm expecting it to be in the 5.3%, 5.4% kind of range, specifically given the fact that they've given a 4.5% number for 26. And from 6.4% to 5.9%. So I'm expecting that to be in that kind of range.
And any sort of number that's higher than that, you'd be wary?
Yeah, I'm pretty sure that it'll be in the 5.3 to 5.5% range. I think this government that way has been on the fiscal consolidation part has been very disciplined.
Well, we're going to have to leave it at that. Look forward to touching base with you later in the day, post an opportunity to hear what the finance minister actually presents. A quick break right here on NDTV.
All right, that was the corporate view coming in from Delhi, and we'll be getting you those updates through the day. Remember, you're going to get a very comprehensive 360-degree analysis right here on NDTV Profit. Meanwhile, time for a very short break, but we're back with our Budget Masters right after this. Don't go away. Well, exciting morning and packed house here at the NDTV Profit Studios in Mumbai as we are prepping you for what is coming. Less than 30 minutes left as scheduled for just about 35 minutes left for the Finance Minister to present her 6th budget. It's going to be an important one as we've been speaking. It comes before an election, but one that this government at least is very confident of winning and will show policy direction. Meanwhile, what's happening to the markets? Moving into positive territory, I would say with caution and some trepidation. What is really racing ahead, though, is auto. There's no stopping Maruti, and I'll just quickly pull up some of your auto numbers this morning. So a couple of things happening. Good numbers for Maruti relatively. Your auto passenger vehicle sales, etc., are all out today, and that's expected to be good as well. Maybe a bit of benefit from an infra push if that's announced in the budget. So 4% zooming on Maruti. Meanwhile, let's get back to the conversation right here in the studios, and I'll come to you, Mihir. A thing that I have noticed with at least the Modi government budgets, and correct me if you're wrong, for a long time, any kind of announcements that were seen as quote-unquote populist was seen as negative for market. But that is something that has become very easily absorbed when it comes to budgets that this government presents. Do you see that trend continuing? That, okay, if there is an increase in Pradhan Mantri Kisan Nidhi Samman payout from 6,000 to 9,000, no big deal, theek hai, chalega. We need it. You want to build up bottom of the pyramid. What the market is looking for is whether you're actually spending on capex. And do you think that trend continues? So they can get away with a little more subsidy push or populist moves?
Certainly. But having said that, we also must realize that 2014 onwards till 2019, we actually saw a decent reduction in the overall deficits and subsidies. Yeah. The subsidies as a percentage to GDP till 2019 actually came down quite well. It's only because of COVID that they had to increase the subsidies, especially on food and fertilizer subsidies. So I don't think there is a general bent of mind to be populist. wherever they are seeing pockets of stress or need to do it, they are doing it. It's not even across the board.
So no reverie.
No reveries. And I mean, look, during COVID, you had to do it, right? There was no other choice. But the general tendency has not been to blow up the fiscal deficit. So I would not be too worried about that. There is a strong focus on capex. You name any minister, they are talking about any kind of incentives required either by the private sector or even pushing the PSUs to spend their cash on capex. So that trend of capex should continue. As I said, they've been hiking capex budgets by almost 30% CAGR for the last 3 years.
But it's going to slow down this year.
It would slow down, but I'm saying, given a choice, they would still go for good deficit rather than a bad deficit.
You're not worried about maybe a slowdown in spending on capex and what it does to those sectors and stocks that have run up massively? Your railways, your defense, your infra, etc. Are you worried?
Look, railways, I'm not too worried, at least for the next few years, because they have laid out a path to modernization and they will continue to fund it. I don't think there's any backtracking on the existing announced capex, which is robust enough. On defense, actually, physically, they have not increased the capex budgets by dramatic amounts. It's the Atmanirbharta and manufacturing in India, which has been the exciting point, right? And now we are even talking about exports of defense. So I'm not too worried about railways. Roads, again, there is a certain momentum that will continue. NHAI can fund itself. They have been kind of, and plus there is also the InvIT route, which is becoming popular. So they can monetize some of the assets also. So there are enough levers to sustain capex. It may not be 30% growth, but even if it's a 20% growth, I'd be happy.
Taking a cue from capex, what do you think is happening on private capex? There's clearly been no pickup on that front. Anything that could be foreseen or expected to boost private capex, because that wheel also needs to run?
Look, private capex, again, on the headline, if you look at the survey data, etc., it seems to be taking some time. But if you look at the order books of capital goods companies, engineering companies, they are pretty much full.
Yeah, right? It's the execution that could potentially be a concern.
I think this time around, the difference is that unlike the 2003 to 2010-11 boom, it's not, the capex that's happening is not in mega projects. It's not like massive refining capacities or massive steel plants or, massive oil and gas fired power plant. This time around, it's more granular. I think there's a lot of mid-sized companies which are doing capex in the manufacturing front. The PLI scheme, I think, is a huge stimulus, and the impact of which probably we are going to begin to see now. Yeah. And the good thing is that PLI is really speaking open-ended. Any sector which needs incentives is getting it, frankly.
Taking a cue on that PLI, usually out of budget, do you think there'll be any indication on this? Sectors may be potentially added, extensions may happen this budget today?
They could, but as I was saying, it's open-ended. Any sector. We started with mobile phone manufacturing.
And it's not time limited to today in that sense.
Exactly. I mean, any sector, frankly, any amount also. If industry is going and representing the government, they seem to be having an open mind.
Yeah.
Okay. The other aspect is energy. And we know that there are paths laid out. Company after company cited that in their presentations that, hey, this is the opportunity size, etc. There was some mention or a significant mention last budget as well to both Shankar and Mrinal. Shankar, starting with you. What's the focus on energy? Renewables plus the outlay and the impact thereof.
So if you look at the data, we import 86% of our crude requirement.
Exactly.
It's unsustainable, really speaking.
Exactly.
We have managed now because thanks to Iran and Russia and stuff like that. The other part is that 49% of our power generation depends on coal, which again is an issue as we transition to, for climate change zero. Or India's position is that capping net carbon emissions, not necessarily net zero. So what do you do? So the Prime Minister announced on Jan 22 or 20, the day after the Ram Temple thing, the PM Suryodaya program, the solar for 1 crore or 10 million houses, that's unfunded just now. So that funding might come through, but it might be expanded to other urban. So the 10 million is primarily aimed at bottom of the pyramid story. It is the renewable version of Ujjwala.
Yeah.
So once that kicks in, they might create, which is why I said that if they redefine the deficit in terms of what is the green deficit and non-green deficit, there will be an energy transition story in this. And while we talk about private capex, I just wanted to add, we must remember that the corporate tax cut that we saw in 2018-2019 is sort of expiring. And I don't think this is going to be renewed. So the substitution will be through PLI, because it's a much more viable, much more directed idea. But all of this depends on whether they're able to grow the economy, because as it is, the Reserve Bank of India has sort of screamed about the credit deposit ratios.
Yeah.
And why deposits are not growing is also a part of the mystery as to why private final consumption is not growing.
Yes.
So there is this thing. So I think CapEx is on, I don't think, and there might be something new. How do you add to the government CapEx? How do you add to the government infra spend? It's to create the projects, green hydrogen, solar, multi-projects, basically.
No, yeah, but Mrinal, that's the point, that one, that there is a clear data given about the targets on the green side, wind, solar, etc. And two, as much as we've spoken about government capex and private capex, household capex also needs to be given some bit of a leg up. So therefore, one, do they do anything on the renewable side meaningfully, and how meaningful could it be? And could there be housing swaps, for example, loosely put, which could bring about maybe one factor of household capex into the fray?
So look at the technology landscape. I don't think we have a serious base power renewable option around. The government can create subsidy, can create framework, and it can incentivize some bit of peak power replacement through renewable, but we don't have a technological solution which is going to take over, let's say, 49% of our coal power generation. It's not there if you take away nuclear. So we will see the transition is going to be there towards renewable, towards greener mean of things. The government will do its bit, but I think unless science comes up with a serious technological solution, it will have its own issues.
But not the remit of the budget. So on the budget, what can happen which can even help some of those sectors or some of those themes? Because there has been a run out there anticipating continued government support, right?
There is one point to add to what he said. In terms of technology, the government is actively looking for storage solutions. Both keeping in view the green hydrogen idea and the solar. And you know, Mr. Musk has visited Pune, and there is an office he has set up there. They are talking to indigenous startups who are looking at storage. So you might see something, and I hope to see something, an incentive for storage, energy storage.
Sure. But yeah, so okay, maybe that too, and we'll look out for that. But just rounding off my questions, therefore, and I'm approaching this purely from a markets angle, that so many sectors and themes have had this spurt in the anticipation that continued support comes in. So what stands out in this budget or the next, but whatever, what stands out on the renewable side or on the housing swap side?
Well, housing is a clear darling. It is the sector which creates the biggest employment. It's the most formal sector which has the largest number of formal employees, and it has traditionally had tax swaps. It won't be a surprise if you want to actually move up the formal employment number, you want to bump up the household expenditure, there should be increase in the tax swap in some form and shape for housing.
You think affordable housing is the route to do it? Because that scheme hasn't really taken off, and now there is a demand that please increase the ambit of where you call it or how you define it as affordable housing.
Well, it could be a combination of both things. Number of taxpayers are just 6%, so if you want to really reach the masses, I guess affordable housing definition might be a good way to. And private capex, in the private capex side, the government has done its bit in terms of what it has rolled out on PLI. It needs to continue to spend on the capex side in the economy so that the buffer, the slack in the system goes away. We have the job generation, we have the economy picking up, and when the revenue or taxation revenue does reflect at some point, they can slow down on the government expenditure, and it will actually compress the fiscal deficit that we've been bothering so much about. In absence of good spending by the government today, we are not on the right trajectory to achieve fiscal consolidation 3 years down the lane or 2 years down the lane. It is required as of now that the government invest, because that will result into more jobs, more economic activity, which will increase the revenue for the government, which will finally help controlling the fisc. In absence of that, we will keep dragging things and it will go nowhere.
Well, it's a tightrope, you have to admit. A trinity of some impossible choices to make. What we'll do is take a break. Just before we take that break, though, about an hour and 20 minutes for the markets. Paytm still sulking, down about 20. But on the flip side, aside of autos, there is also some other stocks which are doing well. Shree Cement is a case in point. So that has done well. Not that all the other cement stocks are doing well, but Shree was up about 5% the last time I checked, 4.5% for it. And FMCG, it's the morning for FMCG, Godrej Consumer in particular, but some of the others like Dabur up 6%, not doing too badly either. Take a very quick break, come back with more.
It is a matter of truth that the 1st February 24 budget that will be announced will just be a vote on account. By 2047, India should reach a $30 trillion economy size. For the growing population, growing youth, young who need more skills, who need to upgrade their skills, you need the newer areas also to get priority.
All right, less than 20 minutes to go for the big budget speech that we're waiting to hear. Finance Minister Nirmala Sitharaman's 6th speech, an interim budget speech, but nonetheless an important one. We have a packed house here at the NDTV Profit studios. All our budget masters are in, and I'm going to introduce them one by one. Manish Dangi joining us this morning. Mihir Vora is here. We have Shankar Iyer and, of course, Mrinal Singh are there in the studio. So welcome once again to all of you. Manish, we've been having an interesting conversation about whether the expectations or the possibility of populist sounding measures are now priced in. It's not going to ruffle too many feathers because there is an understanding that this is a pre-election budget. You have to at least make some announcements. Now, how much money you spend or not is a different story. You would agree?
So, there are a couple of things. One is, of course, the I mean, if you call it Modinomics, he does tweaks, but no extraordinary stuff is ever done. Neither in Gujarat for his 12 years term and nor the last two election speeches, So there was nothing extraordinary. Two is that as it is, budget and its finances are such that there's very little wiggle room now to sort of expand incrementally. So it's going to be only reallocation. Third is that within the budget of, let's say, government in India spends about 15% of GDP, just about 3.3% is spent on welfare. So only that you could tweak a bit. Some of it could. So very likely there's going to be a sort of subsidy going down by about 15-20 basis points as a percentage of GDP, and that much could actually go in terms of giving it away to through Kisan, some insurance scheme, likely some scheme for the organized labor because they have a data now. A lot of this labor, sort of urban labor.
Gig workers.
So not gig work, but generally all sorts of labor. So, it's sort of we are headed towards, in general, in the next term, kind of a basic income for 50-60 crore Indians.
Yeah.
So slowly, a lot of indirect subsidies, fertilizer, food will be subsumed in stuff like Kisan. So you'll have a labor-oriented sort of scheme most likely today. Kisan will have about 25-30% uptake. So from 6,000 per year to sort of likely to 8,000-9,000 bucks and so on and so forth.
So there's talk of an urban version of Manrega. Or some version of a...
So Narega is a insurance scheme effectively. It's going to be, it's not an employment guarantee scheme. Likely is that you're going to have a transfer. Because in urban, you cannot actually have urban landscape. You cannot offer Narega.
No, in the sense of when I say a version, I mean a payout kind of scheme where you have some guaranteed income for a certain number of days. We could see the contours of that.
Sorry, yeah. So basically, urban version of Kisan.
Okay, yeah, that's better put.
Manish, what are you expecting on tax buoyancy? What do you think is being priced in or penciled in by the government? Of course, the first 8 months, it was up by 30%. Compliance, admin, some believe is a one-time step up. Others believe because it's compliance and admin, that number will continue running. How do you feel about your income tax and also out of that ambit, so indirect tax, so your RBI dividends, PSB profits? What is the sense? What is the pricing in that you're working with and that number which you're comfortable with, and I believe the markets also would be?
So from a taxes point of view, it's been an extraordinary year.
Exactly.
And so to the extent everyone is surprised, including FM, us, all analysts. Everyone is surprised, especially in direct taxes. The buoyancy has been extraordinary.
Yeah.
Some of it is sort of a mean reversion happening because, post-COVID, 2-3 years were very bad. 2 years were very bad. And then it's sort of going back to 2017-19 levels. But the buoyancy has been very, very strong. Very, very likely that it will fade in next 12 months. Again, the way budget math works and this particular FM works is that she would not assume more than 1.2 times buoyancy, which is a historic buoyancy. So it's sort of, you would get a 10.5% nominal GDP growth in budget estimate, and you will get about 11.5% odd tax growth. So that is what you will get. The small sort of a nuance in buoyancy is that while direct tax buoyancy is very high, the indirect tax, which is GST, is not that high. And so it sort of reveals a little bit about the economy of the K-shape that we've talked about, that a small 5-7%, 10% of the population which actually consumes sort of your air travel, a lot of tourism, that guy is actually doing very well. And his income and the corporate taxes and all sort of booming, twice of GDP growth. But the GST, which is sort of a proxy of a general consumption growth, that is what you see in the staple growth, discretionary, that is not doing that well. So there the buoyancy is only 1.2 times. In aggregate, the buoyancy this year would be assumed at, between GST and direct taxes all put together, more like 1.2.
And what about non-tax growth? You alluded to RBI dividend, PSB growth, but what do you think is a fair expectation? Again, this year was an anomaly of sorts.
Yeah, so I think even next year, the dividend from RBI, even the PSU bank dividend will begin to actually kick in a substantial manner now. So to some extent, I think the dividend as a percentage of GDP will sort of, in my view, my assessment will rise by 5-10 basis point as a percentage of GDP. These are big numbers. 10 basis point is 30,000 crore, let's say, 33,000 crore. What has been a bit disappointment so far is divestment for last 2-3 years. I think we've run out of assets now.
I think this government is one that does a buyback instead of divestments.
Or sort of, rotate the assets.
Or go on a list, right?
What do you mean we've run out of assets? Aren't we sort of late on
run out of assets that the capital market households, the sort of a blue-blooded capital is interested in. Which actually, so we've run out of those assets, and which
all
is
the
why,
good ones are gone.
As a percentage of GDP, the non-tax revenues have sort of stagnated at 1% or thereabouts. It used to be at some point in time 2%.
Before I come to you on bonds, Mrinal, this PSU rally though, and Manish's point is well taken. We've kind of missed the bus almost every single year for the last 2 on this divestment thing. But could the PSU rally help the government put out a number which they can say is believable on the divestment side for FY25?
Well, if I were them, I would use it.
Nicely put.
Okay.
But I think, Shankar, you had a good point on divestment. You want to come to that?
I think the upside available for them, the headroom available is phenomenal. I mean, the SEBI requires you to have 25% liquidity, blah, blah, all that. None of the PSUs, most of the PSUs don't have it. There's an announcement, I think, 5-6 years back where they said they will reduce bank holdings to 51%. That's bank stocks are not too well, so you will actually give them the buyer the upside. The other thing is that if LIC at 95% or 90%, does it really make a difference to the corporation? I don't think so. So if they put out 5% more as an offer or as a Bharat ETF, they could collect. So somewhere the government has struggled to do the asset monetization, and somewhere it has struggled to do the divestment process. And I think because of the plethora of clearances and rules and all, and also there is a belief in the government that divestment gives them a bad name in the political arena.
I was just going to come to you on that. Is it a question of intent or ability? Because on all of the other things, politically and otherwise, this government has shown the capacity to do what they want to.
So there is a striking contrast if you see. The corporate world yesterday, Dabur, Bajaj, everybody actually spoke like they were releasing political manifestos. Rural spend should go up, Narega should go up and all this. Okay, you never heard this before. People would squirm if you spoke about subsidies 10 years back. Now they're all, CII actually is almost sounding like the new manifesto. But if you see the government's approach, it's still very cagey about issues like asset monetization. Also, the depth in the market. Suppose they monetize the asset and a corporate wants to buy. The deposit growth, credit growth issue that is haunting the Reserve Bank of India will come into play. So probably next year, once the Firangs come in with the JP Morgan money or the other money, there might be some room, some headroom created. I don't know. There needs to be an innovative way to think about this. And one of the ways that I have been suggesting for a long time is to create a sovereign trust, put everything inside it, securitize it, and then issue a ETF on it.
But you should have some thoughts here.
In the run-up to 2014, me and many of our colleagues read biographies of Modi, and one thing that we concluded then, and maybe things have changed, because Modi to a certain extent has changed since then, is that he never believed in all this, selling PSU assets. And so even in Gujarat as a chief minister, his belief was that, okay, let's build our assets better, let's get better ROEs. So things like GSFC, many other there was a sort of a pride in, actually running the government corporations better.
Most certainly.
So I don't know whether it is ideological or otherwise, but the fact is that, divestment isn't happening.
It is very strategic. It is politically strategic because he believes, and people around him believe, that privatization creates challenges for the government in terms of the aggregation of wealth in certain quarters. The concentration of wealth is something that has bothered him, and he doesn't believe that private sector does better than the government if the government is efficient. It is a core belief. You can't do anything about it.
Yeah, it's possible.
There is always scope for divestment, not
privatization.
privatization.
So that's why.
You don't need to privatize.
So that's why I said that the sovereign trust like Temasek or the KFW in Germany can serve the purpose.
Just a quick mention, guys, on the market. It's flat, but Bajaj Auto has reported its auto sales numbers. We've been talking about how auto has been in such a sweet spot this morning and has been on a run. Numbers have come in pretty impressive. The stock is looking okay, 1% higher. The Jan total sales are up 24% YOY, and the CV sales have risen 6%. We will break that down if we get some more time before we run into the budget in about 9 minutes. But yeah, Niraj, you wanted to come in?
No, so I just thought because Manish is here, and I would want to actually, just before I come to you, Manish, on the divestment side, you have this strong belief as well. Mrinal was saying that he would use it. You would believe the numbers could be high on the divestment proceeds side for FY25?
They should, because look at the valuations of PSUs that have gone up in the last 1.5 years. If there was a time to do it, this is the time, right?
Well, let's see if they
and there are lots of companies where the government owns 75+%. So there is ample headroom for at least 30 to 50,000 crores of divestment. Without really doing any strategic sale, frankly.
Okay. And before we take that break, Manish, what would please the bond markets? What would not please the bond markets?
So after very long, actually, and it's almost like bond guys have had this, memories have faded that, there could be structurally things can get better. The bond math never worked out in India since 2007, since Chidambaram did what he did. And in 2009, there was a massive borrowing. Finally, because of demographics, because of the cleaner way we present things, because generally inflation in India has well behaved, the fiscal policies, even though the fiscal deficit is higher, but because the structure of the spending is such that it does not inflate, I think we are headed, not just this year, but generally over the next 5-10 years, lower and lower yields. Okay, and so this particular budget, 5.3, 5.4% fiscal deficit, reasonable 15 lakh crore of gross borrowing, about 11.5, 12 lakh crore of net borrowing. These are the numbers, already out actually. Delhi has sounded us off in some sense, and everyone is going to celebrate these numbers. These are decent numbers.
Okay. We get 12 was slightly higher than 12, but you've got that $25 billion coming in. That would still be okay, I'd imagine, for the markets.
Yeah, but very unlikely it'll be higher. This is going to be a bond budget.
Yeah, most of not higher, if anything, maybe lower.
Bond markets.
Yeah, but hey, guys, we need to slip into a very quick break. So we'll continue this conversation on the other side, but need to slip into a very quick break. Back with our budget masters and minutes away from the budget speech.